Hello, everybody. It is Andrew, and I want to take a moment to go over what's going on in the Boston and Boston metro markets. So, we have come through the end of the spring market, which was delayed by about a few months. So, we are well into the fall market, which typically sees a good amount of activity, second only to the spring market. However, we are in an election year and because of the delay to COVID, driving people outside of the city, we have experienced a shift in the market in many different aspects. So, what I'll do is I'll talk a little bit about a few of the major neighborhoods and we can go over what's going on in those neighborhoods. So, let's start with Boston. Boston proper, the luxury market is relatively slow. We have seen more inventory on the market at one time than we have in a long time. So, what does that mean? Where's the opportunity? The opportunity is really to be writing offers. Um, Projects that are coming out in the 4 to 10 unit range, those developers are motivated. So, pricing wise, if you think that there's something that you're interested in and it may be a little bit outside of your price point, I encourage you to talk with your agent and consider just writing an offer, especially if it is new construction in those kind of 4 to 10 unit buildings. Those are the builders who are most motivated because they can't carry those properties for a significant amount of time. The luxury sector, we have seen more properties in the 1,800 to 3,000 per square foot range come to market than in a long time. There's probably a dozen properties that fall into that category, and for Boston, that's a lot. We're not just talking full service buildings, the majority of these are brownstones. Now, these properties check all of the boxes for the most part. Some include garage parking, most are renovated. There's a whole slew in these by any standards would be considered premier properties that maybe 2 or 3 years ago coming to market would be snapped right up. They are sitting on the market. We're starting to see properties in the 90, 120, 160 day time range. However, that doesn't necessarily mean that the market's crashing. There's a lot of sentiment around, we're seeing lots of properties, everybody's getting nervous. It really speaks to the lower number of people who are coming into the market because of COVID. They may have put plans on hold. A lot of empty nesters who are purchasing these types of properties, they are not as quickly moving into the market, especially into a city atmosphere. If they maybe spend another 6 months a year in their homes in the suburbs, that often is a better alternative to jumping headlong into a smaller condo and selling their home in the suburbs. The markets like the South End, we are seeing what we would call a more balanced market. There's about 3 times as much inventory currently available as there was a year ago. The days on market, we often call it basically the month's supply. 6 month supply that's a balanced market, meaning if you were to not list any more properties for 5 months, they would all sell. That's considered generally a balanced market. For probably the past 5 or 6 years, we've been looking at anywhere from 1 to maybe 2 months supply. So the inventory is way up in the South End. Moving across the bridge to Cambridge, Cambridge condo inventory is up about 100% year over year. There are twice as many listings this year right now as there were last year right now, about 160 versus 80 last year. And if you've been following the Cambridge market, you'll know that that was one of the hottest markets in the country for a long time. I mean, these properties go on the market, multiple offers, very high over ask, and the price was not necessarily below market value. These are just supply and demand. Cambridge was ultra hot. However, there's some opportunity in the condo market right now. The single family market in Cambridge, very active. So that hasn't really waned too much. Multifamily listings are way up as well. We're seeing a lot of landlords who are sitting with vacant units, unable to be rented. Those are sitting on the market. They're deciding to sell the properties and projects. Boston in general has about 4 times as much rental inventory as it has had last year at this time. So that's going to decrease prices for rentals, and also landlords are going to start looking at the equation of, I've been taking so many months of vacancy, let's decide to sell it. So that will potentially have downward pressure on pricing for investor style units as well. All right. Moving on to the Brookline, Newton, JP markets. The single family markets here are relatively balanced. There's been an uptick in the average price point, so slowly increasing. The most desirable have been move-in ready homes. And I think this really speaks to the mindset of people not wanting to jump into a big project for fear that they may not be able to secure a contractor, for fear that there may be another lockdown, and then they're going to have to live in a construction site for a longer period of time than planned. So move-in ready homes commanding a premium. The high end in this area, we have seen 7 out of 10 listings over 4 million go under agreement recently. That's pretty decent activity. There is about 3 times as much inventory in the Brookline condo market year over year. Now, you're going to see a common trend here. Condo inventory has been increasing, and single family inventory has been decreasing. This is directly speaking to people either skipping the step of going from a rental to a condo, then to a single family and going directly to a single family, or just the sentiment of people wanting more space, maybe some outdoor space, and a little bit more breadth in terms of the distance to your neighbor. So condo market, 3 times as many listings in Brookline. If you are a buyer, this is a great opportunity to hit the ground. And as we come into the winter market, really look and see what properties have value, and you may be able to get a good price on something because there's a lot of inventory that other sellers are having to compete with. So we will talk briefly about the Metro West market. That has been very active. Now this is Weston, Wellesley, Natick, Needham, Sudbury, multiple bid situations, properties going off the market very quickly. Again, this is for people who are looking outside of the city that may have been buying in the city. They're now buying these single family homes in price points anywhere from $400,000 to $1 million, give or take. In Concord, there's currently about a 2-month supply. Closings are up about 20%, and inventory is down, correlating about 20%. The lower price point up to $1.5 million is red hot. Over that, you're looking at about 6-month inventory. So that's the difference in terms of pricing and how many months of inventory you have. Kind of, again, giving that barometer of whether it's a balanced market. Anything less than 5 or 6 months inventory is considered a seller's market. Anything above that is really considered a buyer's market. Empty nesters are staying put. This is a common theme and trend that we're hearing across the board. People who might be considering moving into the city are, again, saying, we're going to wait and either see this out or stay with the space. We don't want to downsize right now. So what's the result of that? The result is that we are now looking at less single family homes coming to market that normally would be coming to market because people are moving out of their homes. So less inventory. North Shore, we are seeing increased activity. That's really, again, going back towards the city exodus, if you will. I don't want to use that term too seriously because we're not seeing people fly out of the city, but just in terms of the balance, people are deciding to leave the city, not purchase in the city, and they're buying outside of the city. So the North Shore activity has increased. South Shore. So South Shore, Cape Islands, inventory is down a lot. We're talking 50% less properties on the market. There's strong buyer competition. There's kind of a wave of millennials who are looking for increased space. And again, skipping that potential first condo purchase in the city of a 1 bed or 2 bed. Um, let's see. We are also, again, seeing generational properties not being brought to market because families are staying put. If you have somebody in your family who's got a large estate and it's an escape, it's a place where people are congregating safely, then that property may not trade hands at the same rate as they used to because people are valuing that space more again. In terms of Cape, Cape is red hot. Limited supply. It's been a great year for the Cape markets. Low inventory. Typically, what we've seen for the Cape residency as a July through August market for when the use of these properties is highest. We're now probably looking at something more along the lines of a July through October. Now, if you ask any locals, the end of August, September, October periods in the Cape, amazing. Beautiful weather. It's lower activity in terms of tourism. So we're seeing these kind of shoulder seasons be extended and accepted by people who have second homes or who are looking for second homes. So overall, this is just a very, very quick snapshot of kind of the major markets and what's going on. There really are a lot of opportunities. I think that if you're a buyer in this market right now, having boots on the ground, taking a look at properties, in many of these neighborhoods, you do have good opportunity to purchase at a very fair price, potentially even getting priced below ask, which many of these neighborhoods you could not do 6 months, 12 months, 2 years ago. So overall, lots of different opportunities throughout. Even as a seller, if you are looking to sell into one of these markets that has a higher number of condos, again, pricing and strategy really come into play. Properties are moving. Now, I don't want to get the sense that give the sense that there are nobody looking to buy in the city and everybody's flying out. That's not the case. Properties are still selling, and we anticipate, kind of the culmination of the election year, which activity is always subdued, plus the delay through COVID, as well as the compound effect of people moving outside of the city, really has created a slowdown in activity for the fall market. Come winter, we do anticipate that things are going to pick up pretty quickly. Time will tell if that's the case, but after probably a second wave of COVID and we get through that, which we will, we're going to look at a lot of people getting back to business. And I think that right now is the time, if you're a buyer, to look for opportunities. If you are competing in one of these markets that's outside of the city, you are going to be competing. We're talking some properties, if you're in the 500,000 to 700,000 price point, 10, 15 offers, we're seeing that. All going back to, pricing, strategy, and really partnering with somebody who can effectively help you navigate so that you can compete, whether it's because you're trying to get a lower price point or because you're trying to secure the property. So we will keep these updates going in terms of inventory and what we're seeing in the marketplace, but I did want to just kind of provide this very high level snapshot of the markets. So hope you enjoyed. Any questions, do feel free to reach out. We are always here and happy to be a resource.